Good morning, traders and investors. Bennett, TyndallTradingAnalysis.com. Thank you guys for joining us for the TA Live Wednesday live stream show, formerly Elliott Wave Wednesdays. Hope you guys are enjoying your morning thus far. It's been quite an interesting week thus far in the markets. You know, we've been in an environment that's become increasingly headline driven. We had a recovery effort following the coronavirus pandemic that obviously faced multiple issues from compounded worker shortages at the ports to the semiconductor shortage. And then we had the inflation scare. We had 2 months of relatively hot data. If you take a look at May and June's both CPI, consumer price, and producer price index reports. And then last month we got kind of a bit of a surprise in that consumer price index came in, depending on if you're looking at the core or the headline, it actually came in at or below analyst expectations, which was certainly a good change from the previous 2 months. And then the very next morning, we had producer price index, the PPI report, come out hotter than expected. And then we just had a retail sales report that was quite the miss. So, you know, in times like this where you see such vastly different opinions in the financial media, the best course of action is to continue to focus on the hard right edge of the chart. We've said it, and we continue to believe that the hard right edge of the chart is your best forward-leading indicator. Collective market, trader, investor sentiment is expressed in price pattern developments. And while there's been talks of a potentially, substantial market correction on the horizon, we continue to be a little more optimistic in that, and we continue to operate under the assumption that we've yet to even complete wave one from the COVID low. This is a perspective, a view of the indexes that I presented to you guys this year that I continue to track. This is still part of wave one from the COVID lows, which means the corrective pullback, even if we get it, in our opinion, would simply be a wave two position, which would be a buyable entry. So we'll talk more about the charts in just a moment. Again, thank you guys for tuning in. We're mid-August. The markets have been a little bit choppy the past few weeks, you could say. The NASDAQ 100 established a high on July 26th, and price action since has been a little bit puzzling in that the pattern developments haven't been clear. We've had precise resistance points, and we're actually now starting to potentially see, in my opinion, and I think the team is in agreement here, a rotation back into growth that could result in another leg to the upside in the NASDAQ. So in times like this, we're going to continue to stick with the chart. So hey, let's go ahead and bring in the trading analysis team. Good morning, Terry. Good morning, Alex. How are you guys doing today?
Just fine. Good morning, everybody.
Hey, good morning.
What's up, Alex?
Well, nothing much. Just looking at this crypto market most of the time. We had a members webinar yesterday. Mm-hmm. There is some interesting stuff there, which I'm going to show you later. So yeah, I think we are still in a low liquidity volatility regime. So it usually picks up after the 1st of September. So a week or two, and if you look the average true range, it dropped for the last kind of 20 days. So it's normal in August. I mean, people go to vacation, especially after this long COVID closures. So
yeah, everybody is anxious to get out and start traveling. Of course, we now have the Delta variant spreading, and we've seen some interesting measures taken overseas. So we'll see what happens. What's up in your neck of the woods, Terry? How are you doing today?
Oh, just fine.
Good.
We're
yeah.
About to be empty nesters. Got our youngest daughter just sent off to university this past Sunday. Got her moved in and everything, and so
nice.
Orientation week for her, and
I bet she's excited.
Starting next week. Oh yeah.
Yep. Yeah. It's going to be quiet in the house. It's going to be quiet in the house, Terry.
Oh, she wasn't that noisy anyway. But
that's true.
Yeah,
that's
we definitely
true.
missed her.
Yeah. So, well, good. Glad that went smoothly. We'll have Terry in just a few minutes. He's going to take you through Optima and sector rotation. We'll, of course, have Alex in to discuss the macro scene as well as a little bit of crypto talks. He does have a live stream show tomorrow morning, 9 a.m. Eastern on our Trading Analysis YouTube channel. I would encourage you all to subscribe there. Okay, so let's hit it. Let's jump in. I'm going to take them through the markets really quick. We're going to take a look at the current situation in the indexes, identify a few key levels that we're going to be utilizing as guides. So yeah, let's hit it. And Terry, Alex, I'll be back on the other side. See you guys in just a minute. All right, good morning once again, traders and investors. Let's hit it. Hard right edge of the Motive Wave platform, one of two key tools that we use here at Trading Analysis, including Optima, which you're going to see Terry use here in just a few minutes. All right, so let's first look at and talk about the S&P 500. Looking at the S&P 500, we're on a daily chart, so each one of the bars that you see simply represents 1 day's worth of price action. And if you look at the left third of your screen, we have a 2940.91 September 2018 high. That number, many of these extremes will stick with me for years to come, but it's actually kind of funny. Todd mentioned, previously when looking at a chart, or somebody asks them, hey, what were you doing in 95? We relate so much of our lives to what's happening in the charts. But from that September 2018 high, S&P 500 prints 3 waves down, 3 waves back into the pre-COVID sell-off highs, and then you have the sharp C-wave decline. Up until the sharp C-wave decline hit, we were looking at this as a wave 4 triangle. This correction has resolved clearly impulsively in the S&P 500 as well as the NASDAQ and even the Russell 2000 and the Dow Jones. We see a 104% move from the March COVID low. I've continued to present this wave count as still part of a wave 1 from the COVID lows, which means there's the possibility that the entirety of this blue intermediate degree sequence is actually promoted 1 degree, and instead of this being wave 1 of this higher degree green cycle degree wave 5 here on the weekly, this could potentially be all of that wave 5. That is kind of a back of the pocket wave count that we'll continue to track as a possibility, but by no means is that our preferred interpretation of the markets. So back to the daily chart. Zooming in on price action from May 18th onto today, I'm viewing this as a wave 5 position, which is unfolding as an expanding ending diagonal. Ending diagonals require 3 wave subdivisions in the 1, 3, and 5 position, which off of the daily and down to the 195-minute chart, you can see we do have 3 waves in 1, 3 waves in 3. And the move from July 19th in through July 26th, we're viewing as A, the 3-wave correction into August 3rd lows as B. And if I take you off of the 195 and down to the 15-minute chart, I want you to make note of the progression that the S&P 500 has seen since that August 3rd low. You have a move up in 1, down in 2, smaller 1, 2, even smaller 1, 2, 5-wave subdivision of green 3. That gives you blue wave 3 into about a 261% projection of blue 1. That then gives you blue 4 sideways, meeting equality to blue 2, and also meeting the guideline of alternation in that wave 2 here is directional, and this is a sideways 3-wave progression. And then you have a 5-wave move here into the August 13th high, a sharp 3-wave decline into the August 16th low, and then you have into the August 16th high, that was quite the session, a fairly substantial rally that did find resistance at the 2, 4, 3 Elliott wave trend channel. This is a channeling technique that we utilize in Elliott wave to determine 5th wave resistance, and what it simply looks like is a trend line from 2 through 4, and then you project your parallel trend line over the top of wave 3. When used in combination with upside wave 5 fib resistance, it can often act as a guide to help determine when and where that fifth wave meets resistance and actually comes to completion. So from there, we now have a sharp 3-wave decline. This 3-wave decline can be counted as a measured move. You'll notice equality of C compared to A is at 44.20, spot 5.9. If I take a look at a price label of the low, the actual low was 44.1783. This would suggest that we just did a sharp wave 2 correction, retracing an initial impulsive wave from August 3rd through August 16th. Now, we all know that a C wave position unfolds as a motive wave, whether that's a motive impulsive or a motive diagonal wave. In this instance, we do technically have a completed motive impulsive wave. So from an Elliott wave rules and guidelines perspective, and could this 5-wave move from the 3rd through the 16th actually be all of the C wave? It is possible, but I'm not convinced. Even if that's the case, let me take you over to another count here, which shows that that essentially is what happened, that the 5-wave move from the 3rd to the 16th was all of the C wave, thus completing 5. Interestingly enough, a expanding variety ending diagonal requires progressively larger segments, which means wave 3 is greater than 1, 4 is a larger percent retracement than 2, and thus 5 needs to be greater than 3. If we take a look at 5V3 equality, that was at 44.6486. Taking a price label from that high, the actual high was 44.8026. So we technically did meet the requirements of the expanding variety diagonal. I'm not convinced that's the case. And even if this is the case, this would set us up for that wave 2 correction that I've been talking about for the past 6 to 8 weeks. Zooming in, however, and back to my preferred interpretation, I think this is just 1 and 2 of C. And from a even more bullish perspective, this could be a count which continues to take us even higher, the 1-2-1-2 count that we presented a couple of months back. That's not my preferred count. I'm not just going to immediately adopt that. But I think when we have that bullish interpretation, we have this valid bullish interpretation, we continue to see the 5-wave moves on the upside, there's no reason to fade this market until you have a really good reason to go against it. So zooming back in on price action here from the 3rd through the 16th, you have 5 up and 3 down. Now we could technically still meander lower here in this correction. I'm not necessarily saying that that's complete, just noting the fact that it was thus far a nice, precise, measured move decline. Now, what are the key levels? What's the takeaway in the S&P 500? Well, the takeaway in the S&P 500 is, in the event we move lower, let's say we start breaking through the 61% retracement at 44.1367, and then we go down to the 786 retracement at 43.95, that's when I would start to get a little bit more concerned and start to focus on 43.73 even. That level is simply the origin or the low of August 3rd. And if we break through that, that's when the possibility could set in that we do face that larger wave 2 correction. Interestingly enough, the 44.46 region also happens to be a 161.8% external retracement of the COVID decline. But that's it for the S&P. I'm going to continue to look on the long side unless we break south of the the August 3rd low there. So 43.73. So that's the S&P 500. Let me take you to the NASDAQ 100, and then we're going to take a look at small caps, a chart in the Russell 2000. Market breadth recently has been lacking, you could say, and we've seen a lack of small cap participation as well. And we're actually seeing potential trend reversal and development there as in small caps. So first of all, NASDAQ 100. Looking at the NASDAQ 100, again, continuing to view this as still part of the same impulse from the COVID lows. Zooming in off of the daily chart, we're just going to focus in on all of the recent price action as we did in the S&P. And down to the 195, which let me quickly reset scale. Down here in the 195, last week I made note of the fact that I just wasn't convinced that we were ready to rally back on the upside. I kind of felt that it was a counter trend move potentially based on what we saw in the XLK. The XLK obviously a significant portion of the S&P and also encompassing many of the components of the NASDAQ 100, which is the index we're looking at here. So from the July 27th low into the August 5th high for the NASDAQ 100, that was simply a three-wave measured move. That's counter trend and corrective in nature. This has given way to an expanding variety diagonal. Diagonals have overlaps between waves 4 and 2, and similar to the S&P expanding diagonal, we do have progressively larger portions of this wave. Supports down here at 14,808 and 14,828. Now, unfortunately, in the NASDAQ 100, we don't have a level that sits 1% south of price action like it does in the S&P. If you were to take yesterday's close, look at the 43.73, that's only like 1% below current trading action. Here in the NASDAQ, the kind of warning levels are significantly lower, but let me take you through the alternate view that would say that, hey, maybe we do have that wave 2 to contend with. And I do apologize for my scaling issues this morning. I think we're having a little bit of a bug. But here in the NASDAQ 100, could we potentially be gearing up for that larger wave 2? Sure, it's a possibility, but again, just wave 2 of the higher fifth, and one that we think is a viable entry, if we even get it. So back down off of the daily to the 1 hour chart, it's possible that instead of the wave 4 being A, B, expanding, ending diagonal, and C, that this is actually an ending diagonal inside of the higher fifth, which means that that orange 1 does complete and sets us up for the orange 2. That's not our preferred view. Our preferred view at this point says that we do have another move up into the 15.5 region. Once that 15.5 cluster is met and the S&P completes its 3, 4, and 5 progression inside of that C wave that we talked about, that's when this wave 2 would be more of a possibility. So that's the NASDAQ and the S&P. I'll quickly wrap up with the Russell 2000. Taking a look at the Russell 2000. Again, it's been a very quiet index, eerily quiet since February 9th, established a high March 15th. But again, taking you back to the Elliott Wave clock example, this price action thus far does not look directional or trend establishing. This is very sideways and counter trend, which means this is not a chart to fade. Although it's been weak, it's not showing any directional characteristics to the downside, which means we're going to continue to stick with the upside higher degree trend because the higher degree trend continues to point on the upside. Now, I mentioned that one of the reasons I'm skeptical of that larger orange wave 2 is because I'm actually seeing a possible trend reversal in the Russell 2000. Let's talk about that. Here in the Russell 2000, viewing the sideways progression as blue wave 4 off of the daily down to the 20-minute chart. Let's go 195, a little bit easier to view here. On the 195 time frame, you'll notice that July 19th, the Russell 2000 ran into a zone of support at this 100% 4V2. What that represents is equality to wave 2 of the same degree. We know corrections of the same degree do tend towards equality. And then from that low, we have a 5-wave motive diagonal contracting variety, so a leading contracting variety diagonal that has given way to a rather sharp correction. We often see sharp corrections following leading diagonals. Here in the Russell 2000, we also have some fairly key levels to be watching. If we break south of wave count invalidation, which is simply the low of July 19th and the origin of green wave 1, if we break south of that, that's when we know this interpretation is wrong, and that's another warning sign for the broader markets that I'm going to be watching. But for the time being, this is looking like a potential entry and viable opportunity. I was combining two words there. So that's it for me. Last chart, Moderna mRNA. I want to wrap up with that. Last week, we looked at the idea that we were going to move lower in a wave 4 position. The wave 4 position, we noted 2 key fib levels, one being equality to wave 2. That was quickly pushed through. The next significant level for Moderna included 38% retracement of green wave 3. 38% retracement was at 347.53. The actual low was 349 flat. Is that right? 349 flat. Let's go down to a 10-minute chart. Yeah, 349 flat. And notice we did so in a 3-wave fashion. So Moderna may have just done a very sharp wave 4. I'd still be a little bit cautious, as we do have the alternate that says that that was actually the 5th wave completion. So charts like this, the way I look to handle them is I want to see 5 up, 3 back, see some confirming traditional indicators, and then look at the upside projections. So that's it. I've taken entirely too much time today, but I did want to kind of illustrate where we stand on the indexes, the key levels that we need to be watching in the S&P as well as the NASDAQ, and we'll go from there. Let's jump back over to the team, and then we'll have Terry in just a minute. So what do you guys think?
Beautiful, Bennett. You
Thank
know,
you, Terry.
this guy eats, breathes, and drinks Elliott Wave. I think
This is
even
true.
dreams it. Such an eloquent discussion there. I'm jealous. I'm not quite as eloquent as that, but I try. So.
Oh, you do a great job, but I appreciate it, Terry. And that's true. I do love. We're all passionate about Elliott Wave here. So, all right, let's jump into it. You ready to rock on sector focus?
Yes, sir.
All right, here we go. We'll be back on the other side.
All right, get my little last minute adjustment done there. Hello, traders. I'm Terry Long at tradinganalysis.com here with your weekly sector focus. Volatility has been quiet, but is now on the rise. Now, first we see new all-time highs, and then we get a big distribution day. Now, some see this as a buying opportunity, and others see it as a red flag. I tell you, instead of trading with our emotions, let's let the technical analysis guide our trade plans. All right, with that, the S&P last week marched steadily higher to new all-time highs, breaking that barrier again on Monday. And really, Monday, Tuesday, and Wednesday last week was very quiet. And then we started to see the acceleration really on Thursday and Friday, later part of the week. And the S&P ended up last week up 0.71%. Now, for the most part, though, the technology did not participate in that bullishness, though it ended up 0.18% on the week. The early part of last week saw tech stocks actually fade lower before recovering and pushing higher on Thursday and Friday. Now, while the S&P set a new all-time high, the NDX is just riding along underneath its prior all-time high. The materials and staples sectors rose 2.75%, 2.2% respectively here, followed by financials, utilities, and industrials. Healthcare sector just slightly underperformed the S&P last week, while technology and real estate remained essentially flat, and energy sector last week saw a 0.18% decline. They were really the only losing sector last week. Let's take a look at what's going on this week here. Let me unhide this little table and show you. And of course, Monday's price action here saw the S&P push to another new all-time high, but Tuesday was definitely a distribution day for both the S&P and the NDX, with declines of 0.45% and 0.88% respectively. Now, the consumer discretionary sector was the worst performer on Tuesday, declining 2.37%, while the healthcare sector actually rose 1.18%. Now, for the week so far, the XLV is up 2.33%, while the XLY is down 2.83%. The XLE, the energy sector, just coming in a little bit worse. So from being fairly flat to much more volatility. But look at this here in the healthcare sector here. Let's move on and take a look at our ever-changing sector rotation landscape, which now has the real estate sector in first place, though we have been seeing declining momentum and relative strength there over the past couple of weeks. The technology sector has moved firmly into the leading quadrant, with the healthcare sector also strongly moving here into the leading quadrant. The communications sector, although it is still a leading sector from the relative strength perspective, it has declined down into the weakening quadrant. So the financial sector, that's this one right here, has joined these other value sectors down here in the lagging quadrant. But I will say one positive note is the XLF does have a improving trend in the weekly charts, and the momentum decay is actually leveled off, though it does continue to see a bit of further of relative strength decay here. Now the staples and utilities sectors were also in the lagging quadrant. Utilities here has seen a hook reversal, and it may mean another trip back here into the improving quadrant. And indeed, that looks like where it's headed right now, just crossing the boundary on this last little tick here. But finally, this consumer discretionary sector, which over the last 4 weeks, and each one of those little line segments is 1 week, right? So there's four line segments. So over those past 4 weeks, we've seen a steadily march in a northeasterly heading, rising out of this lagging quadrant back up here into the improving quadrant. It does continue to gain both momentum and relative strength as it heads closer to the leading quadrant. I will note the velocity is slowing down this week quite a bit, especially with the losses that we saw yesterday in the consumer discretionary sector. So let's take a look here. So healthcare is on the run. Now the healthcare sector, this is a plot of the XLV. I'll tell you, look at that. I gotta stretch this out a bit. And we've had a really nice healthy uprun or uptrend since March 4th here. There have been a few periods of some minor consolidation. Right now, the XLV is running well above its 20-day and its 50-day simple moving average, and also the upper trend channel. So that's a bit of a warning that we're kind of in overextended territory to me. Excuse me, I got an itch there. But Pfizer last week had a big bonus week. It was up over 8% as it moved into the leading quadrant here. Where is Pfizer? Here's Pfizer. So last week it was up 8%. This week it's already up another 3.5%. Edwards Lifescience up 3.5%. My list here is not sorted by, there we go. Regeneron's actually the biggest leader this week, up 5%. But look here, I had marked this move in Pfizer coming out of this breakout from July 9th. And it has, wow, we are already up nearly 30% from that July 8th move. I really think there's going to be a cool-off period coming here somewhere. I don't know where, but man, look at this trend, Bennett. That's just insane. That slope is so nice and steady and pure. But guys, you got a big profit in your Pfizer right now. Move your stops up and protect yourself. Don't lose these big gains. Hold on to them. I think Pfizer is really pushing out. This is an all-time high level here, and we just surpassed that. And I think that all-time high goes way back, all the way back here to 1999. So you gotta think good things are coming for Pfizer. But the price does look a bit extended right there. I want to talk about this consumer discretionary because we did have a big drop yesterday, but the consumer discretionary sector has actually been moving sideways for a week or so, sitting just under its prior all-time high and riding this 20-day simple moving average. Then we get Monday and Tuesday's action, which breaks that 20, that 50, and this uptrend channel. So there's a red flag, or there's 2 or 3 red flags going on right here. That move sharper lower yesterday, I think really needs to see the XLY recapture this 50-day. There is a nice shadow here on the bottom of this candle finding support around the 175 mark in the XLY, and we could see a sharp snapback from there. If that is the case, I'll have to readjust this longer term uptrend to marry up with that bounce. But right now, everything looks a bit negative. It doesn't really look that negative when you take a look at the RRG for the consumer discretionary. Remember, Amazon is not the only thing in the XLY, but it is a large percentage of the overall XLY. There's a lot of other stocks in the consumer discretionary that are actually outperforming quite well, and many of them have actually recaptured after a period of weakness. They've actually recaptured a leadership position here. You can see O'Reilly, Garmin, AutoZone. Here is Yum Brands, Dollar General, Lennar, Nike, Chipotle. My son says I say it wrong, and I know I do. So Target's sitting that way out here. Now, don't get nervous about the downtrend when you've got a stock with such a high relative strength. There's just a tiny bit of consolidation. The momentum may be fading here in Target, but certainly the relative strength is not. And I see this as a small correction in terms of this larger uptrend at play here. True, we are running in the upper half of this this large uptrend channel. There's a big gap down. There's a big risk to run down, but I just don't see it right now. We did dip below the 20-day. We do have this 50-day coming up, and some investors see this as a buying opportunity. When stocks dip down, you can see back here in May, we dipped below the 20, didn't even reach the 50. This was a buying opportunity to get back in. Possibly you could consider that another potential entry there for Target. So Tesla's rising up here in the improving quadrant. Several stocks have moved out of the improving into the leading. I really want to see more come up out of this lagging quadrant up here into this improving, though, and I think we'll get the XLY back on track. So Amazon, yeah. So Amazon is still showing this declining momentum. So one thing to note, look how short the vector is. All of these vectors represent 4 weeks worth of movement. Look how short the tail is. So velocity is low. The fact that we're circling back around tells me maybe Amazon needs to rotate back around one more time before it makes a big leap forward again. So sometimes these orbitals are usually clockwise, but sometimes they can make quick reversals. Look at this one here in Yum Brands, and then I'm going to give this back to Bennett here in just shortly. But we saw an improving trend with the southwest vector. That's kind of counterintuitive. How could you be going down, losing momentum and relative strength, yet your weekly trend is actually improving? The sharp reversal happened here. You immediately got a reversal back to the northeast, and now Yum Brands is pushing right back up into the leading quadrant. That type of behavior is typical of very strong stocks, and it can happen to many of them. So we just need to let the market play itself out. Let me see what my chart here of Amazon has, and let's see what we have on Amazon. So Amazon shot up here, made new all-time highs. Then it had this earnings miss where it gapped lower, and that gap that was a large gap that pulled us from 35.80 all the way down to 33.40 or so. And now we're trading below the 20, below the 50. The 20's crossed below the 50. That's the red flag warning. Of course, this break right here was your first red flag. But I want to bring something to your attention. If we go all the way back a year ago to September and we look at this consolidation, this triangle formation or flat, that whichever that we may have called it, this downtrend was the resistance level. We broke through that, broke back down, and then finally cleared it here. Now I truly believe that this downtrend should actually act as support. So I'm hopeful, using my technical analysis here, that we're going to see Amazon gather itself below this 200-day. you can see that we had a period back here in March where Amazon fell below the 200-day moving average, and it played around there for a while and then eventually recaptured it. We had another little period here in May. It was a much more brief period where we ran below the 200, and then we bounced from that. So I expect a little bit of chatter noise as Amazon regathers itself right here on this support line, and I'd like to see that one move higher. So I'm not giving up the ghost. I'm not trading with my emotions. I'm going to use every technical tool in my arsenal and try to trade this market correctly. So, anything else you'd like me to look at, Bennett? Otherwise, I'll give it back to you now.
Much appreciated, Terry. Yeah, I was actually going to have you take a look at Amazon. So glad you caught that there at the end.
Well, there we go.
It worked. It worked. Yeah, the pattern there in Amazon is certainly interesting. We could potentially be in a diagonal formation with the low risk entry on the horizon. So let's keep our eyes on that one. All right, Mr. Alex, sir, are you ready to jump in, bring us up to speed on the world of macro? We're going to have Terry pass you presenter. We'll get you set up.
Yeah, sure.
Get that.
Hope you guys are having a good morning, and just a reminder, tomorrow morning, 9 a.m. Eastern, on our Trading Analysis YouTube channel, Alex will be live for Crypto Lab. All right. You good to go, sir?
Yeah.
All right.
Let's roll it.
Let's hit it. Give me just 1 second. All right, here we go.
Okay, guys. So let's look a little bit of macro in some of the couple environments that I usually look. We have something which might be a kind of a key data beginning in September. So last non-farm payroll was pretty much above expectations, and the next one is around, not around, but 3rd of September. So if we come to the above number which is estimated, that will kind of again boil the narrative regarding the Fed tapering or the possible announcements regarding the interest rates on the upside. Me personally, I don't think that will be possible, especially if we come into this new COVID autumn lockdowns. But anyhow, I think this might be one of the things, if it goes firmly on the upside, which might kind of destabilize a little bit a calm seas regarding the narrative of the Fed going out of the or tapering current QE purchases. Okay, so the neit's one, we also have a Fed meeting in the September. So it will be this time 21st to 22nd of September. So it's in around, in about month's time. So September, I also think it's going to be a key one regarding some very important data in line with what the Bennett and Terry actually see what is going on the stock market. So I think these 2 dates should be on the watch, definitely. As regards of the 10-year yields, we are obviously seeing a pullback from this 1.4. Is this a pullback or a continuation to the downside? It's left to be seen. We are, for now, just meddling around this 1.2 levels. As you can see, if you go on a smaller time frame, you could catch this as a 5 waves up, this as a pullback, but this still needs to go further on the upside towards this potential 2%. As we have seen latest data, there has been not much in a favor that inflation will continue on the upside with previous rates. Oil also fell down from last highs. So maybe we are going to ease off with that. We will see that NFP number as well. But in general, I still think we are not out of the zone to test again this 1.2. So I'm still kind of holding back here, watching what is going on. What is going on, what is going on actually. So I want to see a break of this 1.4, which is the next resistance levels and a little bit more continuation to kind of look for a 2% as a next target. In Europe, we are looking for the German 10-year Bund price, so it's the same. It is inverted from yields, just a little bit more clearer chart, and that's why I did a wave count on it. So it's relatively clear. We are still moving into this sideways potential triangle. So as long as this support zone and a potential fourth wave keeps trading in a sideways manner, I think the probability is bigger. We will go in a next year in a more deflationary scenario than inflationary one, which means that the price of the bonds will move on the upside, either on the further extension of the easy monetary policy or some big event in a financial system which might spur again enlarging the balance sheets from the ECB and other central banks. So what else I can show you on that front? We can look, as always, we can look what's going on with the dollar index. So let's look the dollar index wave count and what is going on there. As I think we were looking for the last week price action, we still are searching for this B wave. So either a little bit more upside or potentially even a triangle. A B wave can go above the previous top. So I'm just kind of watching here, but I'm generally long US dollar. I don't think this will be a finishing sequence. 5 waves down with a small truncation from the March COVID highs. So I think we're still going to stay into a relatively favorable dollar situation until November, December of 2021. We have to, of course, surpass now a little bit higher or after a small pullback, these key resistance zones. As you can see here, usually these resistance zones works well, and it kept the price on the upside in the previous 2 times. So I will expect a little bit of pullback here after we potentially reach it in the couple of days. But I'm still going to stay bullish dollar as long as some of these levels, as we are seeing here, especially as long as this 50% retracement kind of holds potential B wave pullback. B waves can be in different types and forms. It might be an A triangle B, WXY, simple ABC. So we will see how this will unfold. This one was, I think, a flattish one. So maybe we're going to get something more simple and then a continuation on the upside. If you look at on the spectrum of different commodities, copper is moving down. So we were looking for a possible triangle or a lower levels in copper. Now we are very close to break this key support level, which might provoke further selling. So this is the 2 support levels I'm looking. This looks like pretty much a 3-wave move to the downside, 3-wave move on the upside. So we might see something even more complex in copper, but the price action for now is corrective and it's moving to the downside. So it is welcome in this situation to look this key support levels and what the price action is doing there. Soybean also is moving into a sideways price action. I expect a further consolidation or a little bit lower levels, but I still expect a move up because I identified this as a 4th wave pullback after July 2019 or May lows. So we had a nice leading diagonal up in 1, down in 2, up in 3, a little bit extended 3rd wave above our usual key ratios. 200% is here. And then we have something which looks like a 5-wave move, still not completed, or a ABC. We might see a triangle in X and ABC. So 4th waves can be prolonged in time and can morph into different forms. So in that respect, we might say that we are going to continue to favor US dollar to continue on the upside. On the crypto space, we are still not changing our overall outcome. I will show you just one very interesting chart. This is the crypto total market cap, which means that it's not minus Bitcoin or minus alt, so it's total. So the high was around 2.4 trillion. And the next target is relatively big in a market cap if you look at it technically. It will go using our standard kind of a fib projections ratio and extension ratios. We get a cluster around from 5.16 to 5.85 trillion. So that will be almost doubling of the crypto market cap. Before we do that, this is a pretty huge move on the upside. I mean, you will have to have pretty big players coming in with the new money and pushing, actually doubling the crypto market up to this even close to 6 trillion. So I presume we will have, I mean, it will be kind of reasonable and logical to expect a little bit of more of a consolidation and the kind of accumulation of the energy, which we usually see in a triangle for that type of a move. So I'm going to stay still more in a triangle manner, or a little bit more bearish environment for the Bitcoin. We started this overall prediction for the Bitcoin back in March, April as a potential triangle. I kind of left it away because I was identified this as a 5-wave move, but I've seen also triangles developing something which looks like a 5-wave move, and then you get ABC to the downside. So I'll just exercise the possibility looking this crypto market cap chart, and the Bitcoin is still by far the biggest one there. That is going to actually replicate possibly this triangle. If we break these 30,000 levels, I will look for my 20K older kind of a scenario. But I think this crypto market cap chart and some other charts, especially Ether one, which is trading above its 200 moving average, suggests potentially also triangle is possible there as well. I have a bullish wave count, but I still didn't see a quite clean development to confirm that. So with these levels in the stock market, with some of the other stuff as well, a little bit more hawkish Fed, potential margin spillover into cryptos, I will keep it more conservative and still be a little bit more sideways, too bearish, then I will easily get on board on this bullish cycle directly to 120, 150K up to the next of 2021. And I don't think that environment of the macro space is still available for this type of run. I think that big institutions and even some large tech companies has to be involved in the Bitcoin to push it further upside on these prices. And I think that we need some macro environment regarding rates and even reinstalling it and expanding balance sheets, maybe November, December, again from the central banks to push Bitcoin and gold on the higher prices. So I will just address gold, and I will finish with that, because gold has been something we watch regularly. And still the same picture, we are trading in some type of a consolidation, possible triangulation, which will also pair up with this also Bitcoin chart a little bit. And then I think January 2022 might be some of the equality that we might see there, or a little bit lower level. So we are still trading sideways without impulsive move on the upside. So that's it from me. If you want to see more regarding cryptos, join me tomorrow on a trading analysis YouTube channel for crypto update, Crypto Lab with Alex. So back to you, Bennett.
Much appreciated, Alex. Excellent work there. I love the total market cap chart that you were looking at there in cryptos. I love Alex, man. He has no hesitancy jumping out there and putting out bold predictions. I remember early in April when we were pushing through 60K and everybody's like, oh, we're going to 100K. Alex jumped in there and said, I don't know, not so fast. So excellent work as always, team. And again, if you did enjoy the content, go ahead.
Yeah, I mean, I usually stress out. We at Trading Analysis, I've been looking at some youngsters doing the Elliott wave. I mean, you can present numerous wave counts. There is a kind of X possibilities, but you have to take a stance. I mean, what is the point for people having 10 wave counts? I mean, it's always something which is not been addressed very well. So you have to have a stance for one or maybe 2 wave counts, and kind of emphasize where you're standing for. I mean, presenting 10 wave counts going in all kind of directions, it's a pretty easy stuff. So we have to kind of stay behind our analysis, as I would say.
Absolutely, very true. And speaking of good calls, consumer discretionary, nice opening move. Taking a look at the sector scoreboard there. Lowe's up better than 6%. Tesla with a 1.75% move. A lot of interesting names there on the tape. So, hey, if you did enjoy this session, please give it a thumbs up. Subscribe with notifications. It helps distribute the content accordingly and lets the good old YouTube algorithm know that the content is appreciated. And as always, tomorrow morning. What's that?
No, I just said hit the like button, guys.
That's right. Hey, and we appreciate you guys taking time out of your morning to join us. Tomorrow morning, Alex has Crypto Lab, 9 a.m. Eastern on the Trading Analysis YouTube, youtube.com/Trading Analysis. You can check us out anytime, of course, tradinganalysis.com. Members, we will see you in about 20 minutes for the Premier Trader Member Webinar. Viewers, thanks for tuning in. We'll be back same time, same place next week. If you guys have anything you'd like us to look at, come prepared, drop it in the chat. I did see a request there for natural gas. We can talk about that next week. I do apologize for not seeing that sooner. So that's it. We'll leave it there. Anything else you guys can think of before we send them on their way? Good show. All right.
Have a nice week, guys. Powell speech today, right, Alex?
Yeah, I mean, these speeches will be blurred, as I think.
Yeah.
Okay. All right. See you guys later.
All right. Have a good one. We'll catch you guys next week. Take care.